The cat's out the bag. The recession word is getting thrown around more and more these days. In fact, the government probably won't admit it, but we are in a recession. Now, what does that mean to you as a first-time home buyer? My name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across America, whether you're thinking of buying your first property, buying a vacation home, or looking to build your real estate portfolio. We've got you covered. You can hit the description below for links to more information. And if you ever need a second opinion on your home financing, whether it's a purchase or refinance, you can send me an email and I'd be happy to put together an analysis to help you get your mortgage right. Make sure to subscribe to my channel because me and my team put out content every single week to help you learn this crazy mortgage industry and make sure that you do the right things with your home loan. Now, as I mentioned, the recession word keeps getting thrown around more and more these days, and the government's changed their definition of what they think a recession is. So it's hard for even some of us to even determine whether or not we're in it. In my opinion, I think we've been in a recession, but more importantly, what does that mean to you as a first-time home buyer? Because obviously that word gets thrown around and fear probably comes to mind, and you probably think that now's the worst time to buy, or now you're really second guessing. Do I even want to purchase a house in this market? But I want to rewind the tape back to the crash in 2008. Now, 2008 and what's going on right now are two completely total different things. So let's just make that very, very clear. I do not think we are going to see a crash like we did in 2008. And I'll talk about that really quickly before I get into more of this information here. But back in 2008, I actually got into the mortgage business in 2006, 2007. So I remember that time very, very vividly. It was really tough in the mortgage industry here in Las Vegas because everyone was losing their home. Las Vegas was a hotbed, if not the foreclosure capital of the entire country, other than maybe Florida or maybe California. But the issue of why so many people lost their homes was because values decreased so significantly because the values were artificial from the beginning. There were no checks and balances with real estate professionals, mortgage lenders, and appraisers. I would hear these stories about realtors that would literally pay appraisers to appraise a home at a certain value. Lenders would do the exact same thing. So of course the values were inflated. Of course the values were fake. Nothing was real back then. Back in the day when you had a social security number, you could get a house. And if your credit score was good enough, lenders wouldn't even ask you for a pay stub. So there was rampant fraud. There was rampant just greed that ran crazy back during that market. But the thing I want to focus on is what the media did back then. The media was so heavy on the negativity, which is what they do today. In fact, it's probably worse today than what it was back then. But not to get political or anything about it, but think about all that gets talked about today. The recession, the inflation, and everything else that's going wrong in the world. And that's really what the news is there for. There's really nothing positive that ever gets talked about. So as a buyer, you have to read between the lines of what you hear and what's actually going on in the world. Now, back to 2008 again, that's all you heard was foreclosure this, foreclosure that, bankruptcy, divorce rates going up. Everything was just negative. But I had a lot of clients that I was dealing with at the time early on in my career that were investors and they were buying. So despite the media saying, don't buy, don't buy, don't buy, or they're just giving you all this negativity, I had this whole group of investors and people that said, screw it, I'm gonna buy. And those people won, and they won big. So even in today's market, I think as a first-time home buyer, you have to weed out the news. You have to weed out the negativity. It's like anything else in life. You get what you focus on. You focus on negativity, that's all you'll see. If you look at opportunity, you look at growth, you think about abundance, it's going to be there. And the other thing that also caused this big crash that we had was the wave of foreclosures that took place because home values dropped. Short sales weren't even a thing back then. No one even talked about it until several years into the foreclosure crisis. But in today's world, Zillow did a report about several months ago that said there's about 37% of all homeowners out there have zero mortgage. Zero mortgage. Almost 40% of homeowners who have a property do not have a loan. So if you don't have a loan, how are you foreclosing on your house? So that's where, in my opinion, where is all this inventory going to come from for prices to just suddenly crash. In a recession, one of the things that's always up for conversation is employment. And I will talk about some cautions that I think as a buyer you should think about. But if you're looking at employment, and let's just say you do lose your job, you own a house and maybe your house is almost paid off, you would sell your home, or you get a home equity line of credit to tap into your equity to pay your bills. So there's a lot of ways and a lot of solutions today that weren't around back in the crash of '08. So if you're watching this and someone's telling you don't buy because of the market back then, I'd go the complete opposite way. I don't care if that's a friend, family member, your mentor, whatever it is. There's so many people out there that are talking so bad about the real estate market right now. But to me, what really boils down to a crash is simple supply and demand. Back in the '08 crash, supply was insane. There was so much supply that you, as a buyer, you could go and pick and choose what house you wanted. And the banks made the mistake of flooding the market with properties. Now let's think about what happened during COVID. The banks came out and offered forbearances. The banks were smarter this time. They had the opportunity during the pandemic to say, you know what, screw it. Let's do what we did again in '08, foreclose on people. Let's not help them, kick them out of the house, and let's go sell these houses again. But did they do that? No, they didn't. They offered the forbearance programs to keep homeowners in their homes, which did what? Increased values. Interest rates dropped, demand skyrocketed, and now you as a buyer, you were competing amongst 20, 30, 40 other people on every single house. Again, the pandemic caused a big problem, but it didn't cause a crash. It did the complete opposite, which was the worst thing for home buyers because you had to pay $20,000 above the asking price, $30,000 above the asking price. And now you were chasing the deal just to get into a house because you wanted to take advantage of the low interest rates. But think about today's market. Today's market, there's less competition. Yes, inventory is up. And even though a lot of the media always puts a spin on this, you have to take into account what took place. We're coming out of a market where we had record low inventory. So of course inventory is going to go up and it's going to look like a big number because you had basically nothing for sale on the market, right? If you had one house for sale and you added 2 more homes for sale, inventory more than doubled. So same thing like today. Of course it's going to look bad that, hey, we went from 1 month of inventory to now there's 4 months of inventory, but that still technically by definition is a seller's market. Up until you get to the 5, 6, 7 months of inventory on a market, that's balanced. That is at equilibrium of what we look at in the mortgage industry. So why is that even bad? Nothing at equilibrium is bad when you look at it in the sense of statistics. So think about that as a home buyer. Don't let the media get you scared about buying your first home. You have to look at what's in it for you at the end of the day. Is it a good time for Joe or Kathy to buy their first home? Because why? Their family's growing, or maybe they're looking to downsize, or maybe you're just sick and tired of renting because your landlord told you that your rent's going up $1,000. That's a good reason to buy. But don't let the media tell you otherwise, because there's so many of these other factors that are taking place that you can definitely skew to the negative. Don't get me wrong. I have clients that I talk to every day that still think there's going to be a crash. I see guys on social media that still preach that there's going to be a 50% correction in property values. I disagree with that, but hey, the only way to find out, we just have to wait and see what happens. Now, during the recession as a first-time home buyer, there are several things that take place. Now, one of the first things that we've all kind of started to see is that prices start to reduce. Now, in my opinion, I think a lot of these reductions are simply corrections to list prices. And what I mean by that is when there was no inventory on the market, let's say Kirsten decided to sell her home. She's my neighbor. She sold her house for $500,000. I now want to sell my house. There was no rhyme or reason as to what I chose to sell my house for. I said, you know what? I'm the only house on the block. I'm the only house in the neighborhood up for sale. I'm going to ask $550,000. And you know what? Back in the day, you got that number because why? There was one house for sale in the neighborhood. And there was 30 people that was willing to make an offer on that home. So again, supply and demand. One house, 30 buyers. I, as a seller, make the rules. You, as the buyer, offer me what I want. Now let's think about where the market is today. There are more homes for sale on the market. However, now as a seller, I can't just ask whatever I want for the home. I have to be in line with where the market is, or else my house starts to sit. So I think right now what we're starting to see is this initial adjustment to reality. As a seller, you may have missed the boat to get that additional maybe $20,000, $30,000, $40,000 on your house that you probably could have got to some buyer who sold their home for cash and now they have a ton of money. Now you're looking at some of these buyers that are going to be a little more prudent with their home purchase. So I think this initial reduction is just coming back to reality. Now, are homes slightly overpriced because of where the market is? Yeah, probably, maybe 10 or 20%. Maybe there's still some room to move, but I don't see a 50 or 60% correction because there's just not enough homes on the market for the values to react like it did back in 2008. Another advantage for a home buyer during a recession is lower mortgage rates. Now you might say, Sean, rates today are higher than what they were. You're right, they absolutely were, because again, 2 or 3 years ago, rates were at historically lows. We've never seen that ever. 2, 3% never existed in 50 plus years since Freddie Mac has been keeping track of their mortgage rates. And you can even check this by going to their website and just simply Googling 30-year mortgage rate history, and you can see the chart. We've never seen 2, 3%. So that's an anomaly. You got to throw that out the window. And so many buyers that I talk to are still waiting for that 2 or 3% rate to come back. But let me give you a quick hint. I don't think that's going to ever happen. Will we come back to the 4s? Absolutely. I think that's definitely going to happen. Could we maybe touch the high 3s? Potentially. Or maybe you can pay points and buy your rate down and get into the 3s again. But for that to be the norm of 3.25, 2.5, I think that's a far-fetched idea. And in my opinion, if that were to happen, I think there's probably bigger issues in the world, bigger issues maybe with your employment or your financial stability that you'd be worried about. And I think the last thing you're going to think about is buying a house. So I think we need to get that thought out of our mind that we're going to wait for this 2 or 3% interest rate season to come back. But look at what is going on today. A 5% rate is not horrible. When I bought my first house back in 2010 and 11, some of you guys know this story. My interest rate was 7%. That was the best rate that I could get at the time. I still bought that house. And for some of you that I've spoken to that have owned properties back in the 80s and 90s, we joke about this. I always ask, and I love asking this question because some of you have actually even commented on some of my older videos that you guys have bought houses back in the 80s and 90s and you guys paid double-digit interest rates. And I always ask the same question. I go, did you regret that purchase? I've yet to have one client in my 15 years that I've been doing this ever tell me that they regretted that purchase at the high interest rate. Why? Because they've all made money off the home. And they're all doing pretty well today for themselves. And I think a lot of it stems from making the right investment, but also being patient and understanding that real estate is not a quick flip. And I know sometimes you might hear these stories of these guys that bought and sold these homes and make a ton of cash, but how many times are they potentially not making that much money? It's just like gambling, right? We live here in Vegas, guys gamble all the time, but they always tell you about the time that I went to the casino and made $10,000. But how many times did you go and you lost? No one ever talks about the loss that people take. They always talk about the wins. So you always have to take some of this information with a grain of salt because interest rates are what they are today. Yes, could you have timed it 2 years ago and bought? You could have, but what was the hurdle that you were facing back then? You had to then pay above list price. So back to my point, would you have bought back then and spend $30,000 above the home price? No, because you were upset that you're in competition with so many people, and many of you were not willing to spend another 20 or 30 grand above list price. You felt you were overpaying for the home. But in hindsight, you didn't overpay because why? Because you made money on your house today. So real estate is always one of those things when you look back in the rear view mirror, it's easy to point out the things that you missed. So that's why when you're looking at the market today, you really have to take everything into account. And in my opinion, a lot of it boils down to what your financial situation and goal is. Forget what everybody else tells you to do. You have to look at what your intention is when you buy the home. Just like when I bought my property, I needed a home to live in. I wasn't buying it to sell it. I wasn't buying it in hopes of making a ton of money on it. I literally needed a house to live in, and that's all I cared about. And it's turned into an amazing investment because I owe very little money on the home. It's worth hundreds of thousands of dollars more. And if I decided to sell, great, I could sell it and then go buy my dream home and take advantage of today's market. So don't get caught up on the interest rates. And remember, there are ways that we can get you a below market rate today. Whether you talk to me or you talk to your lender, ask them that question. Make sure they're showing you those options because they're strategies that can get you to win today. And another pro in this recessionary market is that sellers are willing to give concessions. What does that mean? The sellers are willing to negotiate. They're willing to cover your closing costs. Again, 2 to 3 years ago, that was unheard of. If you were a buyer and you said, hey, can we ask the seller to pay for my closing costs? 9 out of 10 realtors would tell you, no, don't even ask. You're wasting my time. And it was that. It was as simple as that. You could not ask. You could certainly ask, but the seller was going to say no. Why? Because you had to put your best foot forward. So in today's market, sellers are willing to play ball. So as a buyer, that's a huge advantage. Because if I can get potentially the seller to come down potentially on their sales price, maybe I can use some of their credits to buy their interest rate down, or I can cover my closing costs. I'm minimizing my out-of-pocket expenses to purchase. Again, that's another win for being a buyer today. And last but not least, there's less competition. Back to my point, 20 offers on a house. It was insane. And some of you that have been watching me this long, you guys were out there looking at homes, and I've probably spoken to some of you that decided to wait. You waited to buy because the competition was too crazy. You'd fly to Vegas, you go look for a weekend, and you unfortunately didn't get into a house. Why? Because your offer kept getting rejected. Today's market, you have the time as a buyer. You can go look at a home and actually think about it. So many of the decisions that were made to buy homes the last few years, you literally had to decide on the spot, am I gonna buy this house or not? You really didn't have time to think about it. You just wrote the offer. Maybe today you're having a little bit of buyer's remorse because you got into the house and really didn't give it much thought. But again, another advantage to the market today, you can think about it, especially for being a first-time home buyer. You don't want to rush into a house and be house poor. Talk with your wife. Hey, is this going to work for us? It's going to work for our kids. Are we in the right school district? Are all of these questions that maybe you glossed over a few years ago, you can truly think about today and make sure that you are buying the right property. Now, in the beginning of the video, I did mention some cautionary things that I will talk about, and I want to hop into that really quick. And one of the things I want to share is your job stability. And because in a recession, jobs is always one of the first things that a lot of companies look at, whether they furlough you or essentially they lay you off. Now, I hate being the Debbie Downer, and for those of you that know me, that's definitely not how I roll, but we have to think about this. If your job situation is not stable, I wouldn't suggest going into buying a house, because when we qualify you and we're looking to get you approved for financing, we have to know that your job is stable. And you never want to get into a position where maybe you lose your job halfway through the transaction and you lose your earnest money deposit because you're past your contingency dates or whatever might happen during the deal. You want to make sure that you have job stability. And that was also another big pain point during the crash, is that as the market got worse and worse and we were going through that financial crisis, companies were shutting down, people were getting laid off. I remember I was fresh out of college and I was trying to find a job. I double majored in school and I had a pretty good background, but I remember hearing these stories of people that had master's degrees, doctorates that could not get a job. So we don't want this market crash to take place. I know some of you might want it, but you have to think about the bigger picture, what takes place if that happens. People are gonna start to lose their job, unemployment's gonna go up, and like I said, we are gonna have bigger issues at hand than you thinking of the opportunity to buy a house. So I think that the environment that we're in right now is an amazing time for you to be a homeowner. If you are renting today and you thought about buying, the last few years got you a little spooked, I think right now is the perfect time for you to talk to a lender to see what does it look like for you to get qualified and how much money is that going to cost you. This might be the perfect storm for you to get into the house, start building some equity, and remember, the rate that you get today is not permanent. You can refinance and take a lower rate when and if we do see rates come back down to maybe the 4 or 3% range. Now, I know some of you are going to argue with me and say, Sean, well, I'm going to wait. I still think the market's going to crash. And you know what? You may be right. You may be right. And if that ever happens, I will say that on my channel that you were right. But think about this, and this is also another cautionary thing. If the market were to go back to the 2 and 3% range, I can assure you of one thing. There will be more buyers out there in the marketplace again, because there is still so much money sitting on the sidelines in anticipation of that to potentially happen. So as a buyer, if you are thinking that, remember what happened the last couple of years when people were asking above list price on homes and you were being rushed to purchase, because I think that would happen again, which will only cause more frustration for you to be a buyer in that market. So I personally would rather take my time and purchase, be amongst less competition, and as a buyer, I want to be in the driver's seat. I don't want the seller dictating how I need to purchase a home. Now, I hope this video has helped you. If you have any friends or family that are thinking about buying, make sure to share this with them. And if you have any thoughts or comments about the market, drop that below. I'd love to have that conversation with you guys. And if you're ready to get pre-approved, send me an email and let's get you started. Thanks for watching. I'll see you on the next one.